Volkswagen sales are down, profits are down, and they're literally in for a world of hurt. Could you imagine stock prices dropping by 2.6%? Sales overall dropping by 2% in the first quarter. How about some of their sub-brands like Porsche losing about 16% of their sales this year when you compare it to the same time last year? That's right, German automaker Volkswagen has reported they are actually down 20% of profits in the first quarter of 2024 due to two major factors: inefficiencies and operating costs, as well as reduced sales of some of their product lines. Now, the Volkswagen Audi group consists of the Volkswagen, Audi, Porsche, Lamborghini, and a host of other smaller brands are definitely collectively one of the largest car companies in the entire globe. And yet they are starting to feel the pinch of what bad economics looks like and the fact that people are buying less of these premium vehicles, and certainly the company is starting to feel the burn. In 2023, about 5.7 billion euros of profit showed that they could be competitive. However, they're actually down to $4.6 billion profit this year. And while they seem to believe that they can make this up and carry some of that momentum forward, sadly enough, I believe the times are actually telling. Now, Volkswagen, like many other brands, are trying to transition to this whole electrification market, but as we've seen with brands like Tesla, who are literally tanking in sales, tanking in profits, tanking in share prices, they've been slashing their prices, and we're seeing a lot of their competition, even the Ford F-150 Lightning, the Mustang Mach-E, some of the Hyundai and Kia products, full EV vehicles, and even the premium ones from Audi, e-tron GTs, as well as the Taycan are not selling by Porsche, are all key indicators that people don't want to be forced to buy electric vehicles. Volkswagen is caught up in this tangled mess and are also having to transition through this ugly, nasty, horrific time into the electrification market, when in fact they know they've got headwinds, they've got marketplace that is not available, and they've got customers that don't want it. Now, while Volkswagen cited lower sales and higher fixed costs, as well as some unfavorable country, brand, and model mix as key factors in this profit decline. Or could it be that they're just oblivious to the fact that customers don't have money and these vehicles are highly priced? You think of Porsche, for example, a brand that has historically sold premium, high-performance race cars, sports cars for the street, and yet we know that there's been popular models like the GT3, the GT3 RS that have been notoriously known for selling far over sticker, gouging customers time and time again. We now see the market is starting to slowly correct itself, less popularity in the GT3 models, and even though there's still some scalpers out there trying to capitalize on the GT3 moniker, the fact remains is the sales are down on those vehicles too. And Volkswagen CFO and COO Arno Antlitz has actually said, as expected, we saw a lower first quarter results, which shows a slow start to the year. And especially brands like Porsche under the envelope of the VAG group, the Volkswagen group, we know that sells to a clientele that is well-heeled and has a significant amount of income available. Generally speaking, we know that margin and that upper 1% is dwindling fast. The upper middle class, who would normally step up and buy the Macans, the Taycans, as well as some of the Cayennes and lower-end Porsche 911s, Caymans, Boxsters, 718s, and the whole lot of the lower-end Porsches, even those people are becoming fewer and far between and are making hard decisions as to whether they buy that brand new Boxster or whether they put money on the house to pay it off because the uncertain times ahead of them, where they know they need to keep money in the bank, they got to save up for retirement, and with taxation on the increase, inflation rates holding, and the overall uncertainty of where their tax dollars are going, whether it's overseas or over to fat, bloated government taxation policies, even those that traditionally would buy a Porsche are often taking a second look. And as a result, it is literally decimating Porsche's bottom line. And Porsche was one of the biggest anchors in the VAG group. They went from 1.7 billion euros of sales in 2023 down to 1.2 billion euros. Any ideas why that would be? And that equates to a 16% drop from 85,000 units sold last year all the way down to 71,000 this year in the first quarter. What is going on, folks? I mean, the sheer arrogance of charging what is charged for some of these vehicles, knowing full well that the market cap is swindling, people don't have the cash, and what's once a dream, a pipe dream that somebody thought maybe, just maybe, I could save up and buy that Porsche, that brand new Porsche 911, that went bye-bye in this last 3 years through this whole escalation and increases of prices on vehicles across the board, Since 2020, a lot of those pipe dreams went bye-bye for anybody that was even remotely close to buying their dream car. But I believe true headwinds are coming for Porsche even more. We know what's going on with the Macan, where they said they're transitioning that entire lineup to pure EV. Yet in a time when they know it's not popular and nobody wants electric vehicles. And while the specifications on paper look great, the Porsche Taycan also look like its popularity is waning very aggressively, and I would anticipate personally that the Macan will face a brutal result. And while Porsche makes some amazing vehicles, the fact remains is they're very high priced, they're very technical, they're expensive to maintain, own, and operate, and all this at a time that couldn't come at a worse cycle in the economy where people don't have cash. Money-strapped shoppers, marginal employment rates, businesses taking a hit through increased taxation on both sides of the border here in Canada, US, these massive bubble inflation rate that's just holding and forces interest rates to maintain a high level, which means that people don't want to borrow against a Porsche 911 that costs $150,000 or $200,000 Canadian, $150,000 US, when they know they're faced with a 6 or 7% finance rate, means that they're throwing a lot of money at the bank. And a lot of people who generally are well-heeled aren't going to typically throw money to the wind, knowing full well how did they get their money in the first place? By making smart financial decisions. And while Volkswagen is bragging that some of these lower volumes were related more or less to delays in customer deliveries, as well as some product development, as already mentioned, Porsche Taycan and the Volkswagen ID and some of their electric vehicles took a little longer than expected, and that hampered a little bit of the bottom line. Volkswagen still, in all their infinite wisdom, expects to see a continued rise through 2024, with a 5% increase in sales revenue and a full year operating margin of 7 to 7.5%. I truly believe they're walking around with rose-colored glasses on, because a lot of this product development that they're about to release and unleash on the market is related to electrification. And we just spoke about that. Nobody wants electric vehicles. They're selling to a very niche space. And if you want to increase the overall capacity of your sales volumes, which means increased profits, then you're going to have to sell to what people want and not what the government or the environmentalists or the tree huggers want. You have to sell what the customers want. If the customers don't want electric vehicles, they're going to go somewhere else, the path of least resistance. And Atlas is also bragging that we expect additional momentum throughout the year with the launch of 30 new models. At the same time, the effect of some of the efficiency programs that we're unleashing, i.e. unloading personnel, as the year progresses, should all contribute to some of the future success in the VAG group, the Volkswagen, Audi, Porsche group of very expensive European automobiles. So while Das Auto is known for creating some of the best built Sherman tank style vehicles, and Porsche creates some of the most best performing luxurious sports cars on the market, and while Lamborghini creates some of the most exotic sports car on the market, they definitely look and appeal to a broad range of people. But the sad reality with brands like Lamborghini dumping some of their V10 engines to go with twin-turbo V8s and electrification, that's moving to a space that they're definitely going to lose some of their clientele. Volkswagen, with the transition to electrification, we know that people are waving bye-bye to the brand. If you've traditionally been a loyalist to the old TDIs, then you're definitely going to be walking away. And Porsche, with the increased pricing, as well as the transition to electrification and the decision to walk away from some of their traditional high-performance sporty vehicles like the Macan, just means that customers are losing interest one sale at a time. So in my personal opinion, I say watch out for some great incentives. I truly believe everything from those main brands, you're going to likely see some deals coming up this year. As the transition goes into these 30 new models, you're likely going to find some deals. As vehicles sit, there's going to be more incentives. Porsche, Volkswagen, Audi, as their sales start to slide, we're definitely going to see opportunities. So if you've ever been in a market for some of these vehicles, this year might be some of that opportunity. They anticipate a rise in profits throughout the year, but as we unveil and see more of these models that are electrified, it might stir the soul a little bit for some customers, but for the most part, a lot of the traditionalists, to which a lot of these manufacturers in the VAG group are traditionally loyal brand type folks, you're likely going to see the continually decline of the VAG group in years to come. And with all of that said, poof, you're definitely going to want to see that. That's going to tell you everything you need to know about the car industry today. Hope to see each and every one of you in the next one. See you real soon. Bye-bye.